The news has been talking about rates coming down for a while now, and it's looking like in 2025 it can actually happen soon. So how much extra would we be able to borrow if interest rates do actually come down? I'm joined again with my dad, John Kefalianos, property developer and mortgage broker, to explain exactly that and walk us through two different rate drops using a scenario he's put together. My name's Nicola Kefalianos and this is my first home buyer mentor.
Thank you, Nicola. It is interesting times at the moment. We have had rates stabilise for a while after increasing from a very low base a couple of years ago. But there is talk now that the rates will be dropping hopefully this year in 2025. So what this does to your borrowing capacity is it actually increases how much you can borrow, because as rates drop, it increases how much you can service. So I've got a scenario here, very average couple, married, earning $75,000 a year each, looking at buying their first house, one with a HEX debt, no other debt, and we're going to look at their borrowing capacity.
No car loans or anything?
No car loans, no credit cards, very simple. So the purpose of this is to show if we were to receive a 0.5% rate cut, how much extra they can borrow.
Would you be able to show us that?
Yep, we're going to go through that right now. So as it stands at the moment, and let's just pick one bank here, and we're going to go ANZ. ANZ at the moment, you can borrow $729,000, 761. So $730,000. I might actually point out here that Resimac is $780,000. The reason for that is banks got different criteria, which we have gone through before. Resimac have got an assessment rate of 2% above the actual rate, whereas every other bank is at 3%, which is why you can borrow more money with Resimac. So let's just look ANZ 730, rate cut of 0.5%. So we're going to put in here minus 0.5. So ANZ has gone from 730 to 763,000.
So almost 30,
which is very similar to the other banks as well.
more.
So basically, you can borrow $30,000 if the rates drop by 0.5%.
And that would increase your...
And then they're going to increase how much you
power.
can borrow and increasing your purchasing power as well. Correct.
Can you do the second scenario?
So the second scenario was if rates were to drop by 1%, which is a significant increase in what they can borrow. So we were at, our base was 730 before. So 730 to $800,000, 1% drop gets you an extra $70,000.
Wow. That's with ANZ still?
That's with ANZ still. And most major banks are sort of sitting around that same figure as well. So the same amount of increase that you will get. With Resimac, they're at about 860. I remember they were sitting at 780 before, weren't they? So if rates were to drop by 1% with Resimac, it's actually an $80,000 increase on how much you can borrow as opposed to 70 with the other banks. So between $70,000 and $80,000, 1% rate cut will give you an extra $70,000 to $80,000 extra borrowing capacity.
So
it's quite significant.
If these rates are set to drop, it would obviously benefit first home buyers a lot.
Definitely, or anybody looking to buy a house. So anyone looking to buy a house with rates dropping, their borrowing capacity would increase. Not only that, the repayments on their loan, whoever's got a loan at the moment, their repayments will drop, and whoever's looking to buy a house, their borrowing capacity increases, and it gets them to a better quality property as well. So I see this having a big impact on the market. So as you can see, it's not a lot, but if you increase your budget by $80,000, that will potentially increase property prices. So my tip is to try to get into the market as soon as possible over the next 2 years, because rates dropping could potentially increase property prices, yeah.
So if rates are set to drop, even if it's 0.5%, someone could borrow an extra $30,000. Is that correct?
Correct, yep.
And if they drop 1 full percent, they could borrow an extra $70,000 to $80,000.
Yes, potentially in this scenario, but there are other variables as well that got to be considered. But at the end of the day, the lower the rates, the more you can borrow.
But also the higher the property price.
Potentially. I'm talking about demand. So if people can borrow more money, there'll be more demand for property.
Okay.
Which means more demand might increase the value of properties.
Well, let's hope interest rates drop. I might be able to get a bigger and better house.
Yeah, hopefully they do, Nicola. They'll help out a lot of people.
Hope you guys found this helpful. I'm Nicola Kefalianos and we'll see you next week.